Good morning and welcome to Stock Market Today for Friday, September 6th, 2019, Jobs Day. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Head over to Twitter where you can follow me at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And if you go to chaikinanalytics.com/today, you can sign up for a free email to follow along with this show, as well as get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities closed higher in Thursday's trading, led by tech and discretionary. Treasuries came under pressure across the curve. The 10-year yield moved back above 1.5%. 30-year yield closed above 2%, and the 2-10 spread held in positive territory. The dollar was firmer versus the yen. Little changed against the euro. Gold was down 2.2%. WTI crude finished up 10 basis points. And as we get to the desk this morning ahead of that jobs report, futures are up 20 basis points as the index looks to rally for a second consecutive week. Asian equities were slightly higher overnight. European markets are mixed. Treasuries are weaker across the curve, following a big backup in bond yields yesterday. The dollar was stronger against the yen and the euro. Gold down 80 basis points. WTI crude is off by 70 basis points. And there you have it, folks. We have broken from the August range. Support 2850 to 2900. Remember, we moved that zone up yesterday, and now we're moving up the resistance zone. Resistance is in the area between 3,000 and the July highs. RSI is moving higher with price after making a couple of higher lows. That is a positive development. That is encouraging. We now want to see the RSI hold in bullish ranges to confirm the price action that we are seeing. If the market is to continue to trend higher, if the market is to break to new highs, we want to see the RSI actually achieve an overbought level and then on pullbacks hold in bullish ranges. Chaikin money flow is bullish, so the indicators are starting to line up with the recent price strength. Up and out of the August range was the big story in markets yesterday, and now we want to see them hold. We do have the jobs report. We'll see how the market does trade today. But holding above those August highs would really be a positive development and increase the odds that the market is going to break to new highs as well. Our market in a minute now. What are we talking about today in our note to Chaikin Analytics clients? Futures break up and out of the August range. We hit on that. Key themes make counter-trend moves in the direction of risk. We'll talk about what that means, but every Friday I look at key themes and relationships in the market that point me towards whether or not investors are risk-seeking or risk-averse. For the most part, the trends have been lower towards risk aversion. However, over the past week, we've seen some counter-trend moves within those themes. Too early to call a change, but obviously something that we want to keep an eye on. Yields move higher as equities advance. August non-payrolls report today, we're looking for 160,000 jobs, and by we, I mean the consensus. Chaikin does not have an estimate on jobs. Futures points to a higher open today, as I said. Turning now to the power bar ratios for the major market averages. Big shifts with the advance over the past couple of days and really over the past couple of weeks. The Dow is back to even, 6 bulls, 6 bears. S&P 500 adds 1.25% yesterday, and the ratio shifts back to bullish. 108 bulls to 89 bears. NASDAQ back to a bullish ratio as well, 24 to 20 after adding 1.83% yesterday. Small caps outperformed on the day, up 1.8%, 442 bulls. 349 bears. Bonds giving some back, some profit taking in the bond market. Bond prices down by 1.8%, sending yields higher. Tech was the big sector from a performance standpoint yesterday, up over 2%. And we now look at that power bar ratio for technology, and it's greater than 2 to 1, bulls to bears. 17 bullish or very bullish stocks for 8 bearish or very bearish stocks. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish. Major markets, however, do remain mixed. Let's get to our stock of the day today. First Horizon National. It's a bank stock, ticker symbol FHN. Closed at $15.96 yesterday, up over 2%. Banks obviously having a nice day with the backup in yields. First Horizon has a very bullish Chaikin power gauge rating due to attractive financial metrics, very strong price volume activity. Very strong earnings performance, strong price volume activity, and positive expert activity. Taking a look at the chart now, very bullish stock, strong trend, strong industry group. Market and model are in agreement as a very bullish rating is met with a stock that is outperforming the market. And we have a bit of a change here. We've gone from a downtrend into a consolidation and now beginning to work higher above a rising to long-term trend line following an earnings surprise that was positive. Now, I don't love this money flow here. Shifting to the negative. It's still a bit of a mixed bag here, but if we're going to go start to look for names, if you think yields are backing up and looking for opportunities in the bank stocks, this is the type of name you want to look at. I don't love it here because of the money flow and also the fact that the stock is currently closer to overbought than it is to oversold based on our overbought, oversold indicator. But you want to start looking at some of these stocks and start building a list for potential opportunities should some of the themes in the marketplace begin to change. This one certainly deserves a place on a bullish watch list. Adding FHN to a bullish watch list today, as it definitely does look interesting, but money flow and overbought, oversold keep me away from it at this time. Let's head over to the sector tracker now. Looking at the movement of the major sectors over the last 5 days. Tech at the top of the list, and that's an encouraging sign for bulls because tech is the largest weight in the S&P 500. Comms moving higher as well. Comms interesting group, got those offensive and defensive properties near the top of the list. Good day for financials, good couple of days for financials with yields backing up. Energy counter trend move is what it looks like to me. Fundamentals still remain poor for the energy complex. We've looked at a couple of those themes this week in this show. Industrials, discretionary, and real estate are middle of the road. Materials, utes, staples, and healthcare towards the bottom of the list. Obviously, with a backup in yields, we would expect real estate and utilities to come under pressure. Remember, we talked about yields the other day. We said that the path of least resistance is still lower. That does remain the case. We also said that we probably weren't going to go lower in a straight line. All right, we wouldn't be surprised to see some backing and filling in the yields. That appears to be what we have taking place at this time. We'll obviously watch for potential trend changes and the signs that point to a potential trend change. Right now, though, the move looks counter trend in nature, as do a lot of the risk on, risk off relationships that we watch and look at every Friday, but we will continue to watch those. Let's head over to the industry and focus now. Pharma services has been a bad one over the past 6 months. This group has underperformed the S&P 500 by over 20%. Power bar ratio, which measures future potentials, hints at the fact that that trend is likely to continue. 13 bearish or very bearish stocks, only 7 bullish or very bullish stocks. Group is ranked number 17 of 21 subsectors, and it's moved down 4 slots over the past week. So some of the indicative names there, all with very bearish Chaikin power gauge ratings: Axum Therapeutics, Zogenix, and Therapeutics MD, AXSM, ZGNX, and TXMD, respectively, on the ticker symbols. All names you want to avoid if you are looking for opportunities within pharma. These are definitely the names you do not want to hold. And as we look at the trend for the group in general, right, XPH, SPDR, S&P Pharma ETF has a bearish Chaikin Power Gauge ETF rating and a weak trend below a declining long-term trend line. You can see the group's been an underperformer since late October, early November of last year. Money flow has shifted between bullish and bearish, but it's been more bearish and certainly more bearish of late. Overbought, oversold indicator, not much of a signal here in the near term. There's that power bar ratio, 13-7, bears to bulls. It's just a group you don't want to be. You just don't want to be focused here for your ideas, especially on the long side of the portfolio. You want to focus on the groups that have bullish and very bullish ETF ratings that have been outperforming the market. That's where you want to go hunting for your long ideas. Continue to avoid pharma. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers. IPG Photonics, no real news there to send that stock higher, 7 3/4. CPRI and TPR, some of these consumer accessory names doing better on China sentiment. CPRI adds nearly 7%. Tapestry adds over 6.5%. MOS returned to production of a couple of their mines in Brazil led to a 6.72% gain for that stock, and CPRT up 6.5% after reporting earnings. On the loser side of the board, Newmont down with gold. Concho continues to trade lower, following through to the downside after the sale of some of their assets. Church and Dwight, somebody initiated a short report on the stock. That stock lower by 3.3%. MSI did an offering, sent that stock lower by nearly 3%, and BLL CEO signs a plan allowing him to sell stock. That stock down by 2.5%. So let's look at those themes, trends, and relationships that we look at every Friday. Semis is the big one for us. You know this. We talk about it a lot. Semis nearing relative highs against the S&P 500. SMH relative to SPY. Getting close here to these 2-year highs. What do we want to see? If you're bullish, you want to see a breakout. Because when semis are outperforming the market, that's generally a bullish sign for the market in general. Now, you can see we pulled back and held this support line above a 200-day moving average, but really for the past 2 years, we've been in a range, right? No clear trend here. You can see that in the 200-day moving average, right? It's been choppy as well. Smoothed out choppy, but still choppy. Now, the RSI is kind of interesting here because it appears to be shifting to bullish ranges. This increases the odds that the group is at the very least going to test the highs and potentially break out. A little too early to tell, but if you are a bullish investor, you want to watch this relationship closely. If you're any investor, you want to watch this relationship closely, because if it does break to new highs, that carries bullish implications for the broader equity market. So far, momentum is confirming the recent price strength that we've seen, and on an absolute basis, SMH has held support at the 110 level and is now threatening new highs on an absolute basis as well. So continue to watch semis there. They are a good tell for the market. Discretionary versus staples now. This is another sign of risk on, risk off in the marketplace. And we're looking at this on an equally weighted basis to account for the fact that Amazon is close to 23% of the consumer discretionary sector. So we want to neutralize that. We look at equal weight discretionary versus equal weight staples. And when discretionary is outperforming staples, that's obviously a sign of risk taking in the marketplace. And for the most part, since last June, right, investors have been somewhat risk averse, right? And you can see that in the names that have been outperforming, right? The areas of the market. If you look at the areas of the market that have outperformed and have had the best performance over the past 12 months, staples, utes, and real estate, right? That's risk aversion on the part of investors, right? That's risk off positioning, right? And we see that here with this trend. Now it is making a counter trend move back to broken support. We'll see if it can break through. If you're a bullish investor, you would love to see this ratio break through and actually retake the declining 200-day moving average. Too early to call a change here, especially with the RSI still in bearish ranges, but obviously another one of those themes and relationships that we are watching very closely. Another one, high beta versus low volatility. Again, same type of thought process applies here. If investors are risk seeking, if investors are really want to bet, think the market's going to go much higher and they want to outperform, they would own the high beta stocks, and especially own them relative to low volatility stocks, which tend to be more defensive in nature and protect you should the market move lower. Well, high beta has been lagging low volatility, similar to discretionary and staples, since June. Clear downtrend below a declining 200-day moving average. Now, this rally looks to be counter trend in nature for now. Too early to call a change as well. RSI still in bearish ranges. Again, if you're a bullish investor, you want to see this ratio continue to move higher, take out that resistance line, take out the 200-day moving average, and change trend. That would be a sign of more risk-taking on the part of investors in the marketplace. So far, not there yet. This trend is still lower. Finally, I'll leave you with a stock idea, CVS Health Corp. CVS, ticker symbol, very bullish stock. Strong trend, strong industry group, type of name we want to consider, and a bit of a personality change taking place as we go to a very bullish rating and the stock begins to outperform the market. Overbought, oversold indicator rounding out of an oversold position. Chaikin money flow bullish as the stock trades above a now rising long-term trend line. I think CVS is an interesting name here. I'm featuring it in my note to Chaikin Analytics clients today. I think it looks compelling as a bullish idea. That's going to wrap it up on a Friday. I hope that you all have a great weekend. Head over to the site, sign up for the email. I will be back here on Monday. Have a great weekend, everyone.